Hey everyone, it's Nick with Us versus Herd. I want to show you some tips and tricks today in making $100 a day in options trading and some of the things that I use to kind of make it simple for me. Options trading, sometimes a bit overwhelming. Sometimes it helps me mentally to have some shortcuts to find what's the quickest way mentally to get to my goals. What if I want to make $50 a day? What if I want to make $100 a day? What if I want to make $20 a day? And this is a simple way to calculate whether you want to make $100 a day, $1,000 a day, whatever the question is. Whatever the amount is, you're going to be able to see it right here. So I'm going to go through a couple examples, and this really works whether you're long, short. It's simple math. It's about calculating the options pricing. So let's get to it here. I'm actually going to use Tastyworks, and you can obviously use whatever broker that you feel comfortable with, whether it's Tastyworks, Thinkorswim, TD Ameritrade, Schwab, Webull, Robinhood, if you really want to. The information is the same on all platforms because you can use, options pricing is options pricing. The options data is the options data. We all have access to the same data, and it doesn't really matter what expiration you're going to be in. So first off, I'm going to use SPY or SPY, which is the S&P 500 ETF. I'm just going to jump in. Let's just say I'm just going to jump into February 1st here, 2021 expiration. Now, for me, the fastest way to calculate how much money that I'm going to be making or losing on a contract, especially for day trades, if you're trying to hit a certain goal for day trades, what I find with traders is they don't really know how much the option price should be worth. Like how much, if SPY goes up $1, how much you're going to be making. And a lot of people are like, oh, I thought I was going to be making more money than that. I thought I was going to double my money. I thought I was going to triple my money. And that kind of tells me you don't know what options pricing is. So what I look at is delta. So delta, I rely on 50 delta. I like to trade the 40 to 50 delta range. You're like, hey, what's delta? So delta measures the amount the option price will be worth whether the stock goes up or down $1. So if SPY, right now SPY is at 375, almost 376. Let's just call it 375, okay? If SPY is 375 and I buy this contract here, the 375 call, my contract is going to go up 50 cents. So for every $1 SPY goes up, I'll make 50 cents on this contract. So if I buy one, that means I'm going to make $50. And if it goes up $1. If I buy two, so if I want to make $100 a day, I'll buy two of these. And as you can see here, my net delta, my delta right here, almost 100. So if SPY goes up $1, I'm going to make $100, almost $99. Okay. Now you can kind of play with it. Some people don't want to spend this much money. Some people don't want to. You kind of have to play with what expiration you want to be in. A lot of people trade SPY. And if you want to make $100 a day or $50 a day, I recommend looking at what the delta is and how much that is going to cost you. Obviously, let's say if you bought like 1 day to expiration, sure, you can get a cheaper contract, right? You can get a 47 delta, like, wow, man, 47 delta. However, you don't have much time for this to really work out. Like if it goes against you, you're going to get in trouble. That's why I always, like if I'm buying premium, I want to go a week out, 2 weeks out, 3 weeks out, or even a month out. A lot of times, like if the market is very, very choppy, but I'm like, hey, I still really want to be long this. Even for a day trade, like a day trade, some people are like, hey, for a day trade, I only want to do same day expiration. I'm like, you're going to have a hard time. Like it's better to go a little bit further out. If you don't want to put up that much capital, at least go out 7 days, buy it for $397. You're like, man, I can't afford $397. Now, if you can't afford it, you can go to a lower price stock. Let's go to let's say Snapchat. Okay, Snapchat is a $50 stock versus SPY is a $300 stock. You can go out and we can trade the weeklies here. Let's say I can go out to January 29th. This is going to cost you for a 50 delta right here is going to cost you $2, $200 essentially. So if you think about it, if Snapchat goes up $1, it's going to cost you $200 to make $50. So you're going to make 25%. You're going to make it 25%. Now, if you're like, well, what if Snapchat doesn't go up $1? What if Snapchat goes up 50 cents? So if Snapchat only goes up 50 cents, so you have 50 delta, you just cut it in half. So if Snapchat goes up 50 cents, cut it in half, you're going to be making $25. Okay, so if Snapchat goes up from 50.31 to 51.31, as you can see here in the last price, 50.31 to 51.31, you'll make the $50. Now, if it only goes up 50 cents, so if it goes from 50.31 to 50.81, you'll make $25. So like a 25, can you do 25%? Would you be happy with a 25% return on your investment? Absolutely, you might. And if you want to make $100, you can kind of scale up this way. So I'll buy two. So if I buy two, I want Snapchat to go up to 51.81 or 51.31 to make the $100. Now, if you're like, hey, what if I only want Snapchat to go up 25 cents to make $100? Well, then you're gonna have to ante up the amount of money you put up in the amount of contracts. So if you want to make $100, well, there's a couple ways you could do it. You could buy more contracts here. So you could buy 4 or 5 contracts here. So if I put it up, my order here, as you can see here, my order has 5 contracts coming in at like $2. Let me just make it even for us so we can get it easy. $2. So if it goes up $1, my delta is $2.49. I'll make $249. Now, if it goes up 50 cents, I'll make $125. Okay, so that's kind of how I calculate it in my mind. Like, am I happy with this trade? What are realistic goals with this trade? What can I do to make $100? What do I have to do to make $500? Like, if you want to make $500, you could buy a 50 cent delta and you could buy 10 of them, and then you have almost 500 delta. If Snapchat goes up $1, you're making $500. Now, the other thing is if it works against you too. Now, if it goes against you $1, you're going to be down $500. Okay, you're going to be down $500. So that's the caveat. So as it works for you, it also works against you. Now you can also, if you want to spend less money on commissions and stuff, I mean, you can go in deeper in the money. The thing is, sometimes they're not as liquid as some of these. Like some of these strikes here, they have 4,000 volume here, 500 to 20,000 volume here. But as you get like deeper in the money, like there's not a lot of volume and the bid ask is kind of wide. So that's why I don't recommend it. So you can actually, if you want to buy 70 delta, you can. But look, I mean, there's only one volume on it and the bid and ask is enormous. So that's why I really prefer to stick like in the 40 to 50 delta range. And as you can see, look where most traders are here. Look at the call side, 40 delta here, 2,000 volume, 46 delta, 20,000, 54 delta for 4,000. And on the put side, it works the same for the put side, okay? Put side, look where most traders are. 46 delta, we have 20,000 volume, 40 delta, 1,000 volume, 30 delta, 20,000 volume. And then you can see it kind of falls apart after that. And then in the money, same thing with in the money. Now these are not as liquid because those are weeklies. If you go to monthlies, might be a little bit of a different story, but right now I'm just looking at like these weeklies here. Now you can even go down, like if you're like, oh, I can't afford that, you can go down to like one stock that I like that actually moves a lot is Teva. Now, if you're looking for a stock to move $1, you have to understand that you need to trade stocks that move more than $1 a week or $1 a day or something like that, because you don't want to get yourself in a situation where you're trading a stock that's moving 3 cents a day. Like if a stock is moving 3 cents a day, you're like, hey man, I bought 50 delta. It doesn't matter. If the stock doesn't move, if the stock moves 3 cents, you're not going to make that money. You're not going to make that money. So you're going to want to be looking at stocks that move a lot, and that you could like NEO, Teva, Snapchat, AMD, stocks like that are potentially sub 100 if you can't afford it, like the more expensive stocks, sub 100. If you're looking sub 100, if you're looking sub 50. So like for Teva, you could buy, a 70 delta here is going to cost you 66 cents. So what does that mean here? What does that mean? That means if Teva moves $1 to the upside, so right now it's at $11.96. If it moves to $12.96, you're going to make more than 100% return. And as you can see, as I've been going through from like SPY to Snap to Teva, they all have different options pricing, but the delta is remaining consistent. Same with the 50 cent. Look at the 50 cent right here. 50 cent delta right here. 50 delta is going to cost you 39 cents. So that means if Teva moves $1, you're going to be making more than 100% because it's going to cost you, let's say, $40, $38, somewhere around there. And so this options trade will go from 50, with the 50 delta, it's going to go from 39 to 89. So you're going to net the 50 delta there. So you're going to make $50 on that if it goes up $1. Now you might want to stack them this way. You want to buy 10 of these. You want to buy 10 of these, and if it goes up 50 cents, so right now if I buy 10 of these at 50 delta, I'm going to get 496 delta. So if it moves up $1, I'll make 496. But if it moves up 50 cents, I'll make 250. So as you can kind of see, that those are the kind of tricks that I use when kind of trying to price it. So that way you can have realistic expectations when option pricing. Like so many traders are like, oh yeah, I want to turn this 39 cents into $8. You're going to turn $39 into 800. I mean, it could happen, but for that to happen, what's your delta going to have to be to do that? You know what I mean? Like how much is the stock going to have to move to go from 39 cents to $8? I mean, this stock's going to have to move up close to $12 to $13. I mean, what are the odds of Teva moving up $13? I mean, it could happen, sure. I mean, we've seen it happen before. It's like, oh yeah, that went from 10 cents to $13, and it went from, what it cost me $10 and a $1,300 winner, blah, blah, blah. But in the market, what I'm looking for is consistency. I'm not looking to gamble my money away. I'm looking to set realistic price targets for my options trade, and I'm looking to really just be consistent, whether it's making $50 a day, $100 a day, $500 a day, $1,000 a day. And this is an easy way for me, especially with the day trades, to understand how much money I'm going to make or lose, and is it acceptable? Like for Teva, you're going to make over 100% return if it moves $1. Now it's a lower price stock. For it to move $1 is going to take more than it would, like, let's say SPY. SPY moving $1 is relatively easy. Apple moving $1, relatively easy. Teva moving $1. I mean, if we go into the charts here, I mean, it did move from the other day, let's say high to low, $11.50 to $12. Now that's only 50 cents on this run, right? It's only 50 cents. So same with the put side. Now let's go to the put side. The put side is the exact same. So let's look at these deltas here. If I want a 50 cent delta and I want to short, I'm like, oh man, Teva's gonna drop $1 or $2 or whatever, right? I can then buy this. I could buy the $12 put, and as you can see here, it's at 50 delta right here. So if it drops $1, this options contract is going to go from 40 cents to 90 cents. It's going to go from 40 cents to 90 cents, which would be over 100% return. So if you want to make $50 quick, now if you want to make more than that, you can scale that up. You can definitely scale that up. We can go up to 2 delta. So if I want to make $100 a day, and let's say I know Teva's only going to move 50 cents, then maybe I want to buy 4 of these contracts and make the $100. So if it moves 50 cents on 200 delta, I'm going to be making $100. So, a lot of times we're trying to figure out like how much a options price will be when the stock moves so much. Like it's very confusing, but the simplest way, again, for me to understand is like, okay, how much delta am I getting, and how much does the stock have to move for me to get it? And it's easy for me to think in $1 terms. So if it moves $10 with 50 delta, that means I'm going to make $500 on one contract. Now, if it moves, if it moves $1 and I have 50 delta, then I'm going to make $50. So I hope I made that simple. Let me know in below. Drop a like, drop a comment. Let me know if you guys have any questions. As always, stay safe, stay green. It's us versus herd.